What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Wow, what a wild day in the markets. No, not really. It's quite a calm day, but we did have some interesting developments. One being a buy signal in Bitcoin. Yes, I'll be talking about that here momentarily. Let's get into it. Alrighty, everybody. Welcome to the dashboard. First, we're going to start off by looking at the 11 sectors that make up the S&P 500. The top two, energy and financials. Go figure, right? Go figure. They've been the only two, positive sectors all year. Energy was up 1.28%. Financials up 0.3%. This could still be some run-up from the current yields that have been just rising, the 10-year yield, which we'll talk about here momentarily. If you take a look at the left-hand side of the indices, Dow Jones finished unchanged for the day. S&P was minus 0.37, so unchanged for the day. Composite down 0.5%. New York Stock Exchange, come on. It wasn't much movement. I tell you what, it did look decent intraday, and all of a sudden we got a little bit of a... the market just sold off towards the end of the day quite hard. If we take a look at the yields, backed off slightly, but that little 3-month up there did a little bit of a spike up right there. If we take a look at the curves, still remaining sideways at this particular point in time. That's the 10 and 2. And then the 30 and 5 still, kind of just doodling around right in that area. But you can really see on this chart here just how contracted these are getting. And the closer and closer that they get, that means that they're going to potentially invert, right? So we have them nice and spread out here, and then all of a sudden, look at this the 2-year right here starting to really creep up. All this kind of signals that the Fed will probably be doing a rate hike here in March. Whether that's a 0.25 or a 0.5, we don't really know, but the Fed Watch tool, the futures market, is pricing in a 100% chance of a rate hike now. So that would be pretty crazy if they didn't do a rate hike. I feel like the market would probably rally or do something crazy. But we will see. If we take a look at the 10-year, this is where it gets interesting. So a little bit of a shooting star candle, right? Big move up. That was on the jobs report. Now we're taking a little bit of a stall out type day. And if we start heading down lower, that might put a little bit of pressure, take the steam out of energy and financials. I showed an important chart yesterday that, if you take a look at, XLE relative to the SPY, okay? And if you look at that line, it really does match up here pretty well with the TNX, the 10-year yield. Okay, so if the 10-year yield backs off, I would imagine that the relative performance of the XLE would come down. Now, if energy comes down and the 10-year yield backs off, typically financials back off as well, because financials, well, they borrow short-term, lend long-term. So when the 10-year yield is rising, that's typically good for the banks. It's not as simple as that, but that is one, pretty simplistic way to look at it, and it's a good correlation to keep an eye on. Now, this is pretty interesting. I'm going to show you BP charts for energy and financials. I don't typically show these because they're not as, they don't work as good for me personally, rather than looking at like the BPSPX or the BPNDX, but they're still useful in finding sometimes divergences. For example, the energy sector gave us a positive divergence from this low to a higher low, right? And you can see this low to a lower low, and that was right around the area of energy starting to break out. I'm looking at that now in hindsight, but now what I want to call out here is that the energy sector, it's 100% of the stocks in the energy sector are on buy signals, right? And you can see how this kind of moves differently than the other ones. That's because, the two greatest holdings, I think, that are in the energy sector, it's like XOM and CVX. I think the total weight of just those two names are over 40% of the energy sector. So that's ExxonMobil and Chevron Corp. So pretty interesting stuff. Let's go to the the financial bullish percent index. And this one right here is showing actually a negative divergence. So you have a high to a higher high, where you have a high to a lower high here on the RSI reading. It's still not in overbought territory, but there is a negative divergence to call out as it stands right now. Okay, so last time we got up into these levels, we did have that sell-off right there. If you take a look at just energy sector in an absolute basis, XLE, You can see here we're still within that rising wedge. We looked at that inverted hammer candle. Well, we sold off below it, but we didn't get no confirmed close, and we started rallying up higher as we're still remain, overbought there, which overbought can stay overbought for a while, and we still keep trending up right here on the PPO. The more we move, probably the more dramatic of a pullback we will be probably getting, and it could be a very fast one. So we need to be on the lookout for a pullback, because if the energy sector wants to continue to be a strong outperformer, obviously to enter in at these levels doesn't make too much sense. But if we start seeing like pullbacks into the 20, or, pullbacks and then consolidations, or, we start to consolidate like that and start to flag out, we got to keep an eye on stuff for that potentially happening. XLF, if you take a look at an absolute basis, this thing is just talk about a very strong move from this sell-off, right? This V-bottom type bounce. And, some might call this a bear flag, a rising wedge. And that's a very strong possibility, especially when we're looking at that BP chart. So what would we need to see? Well, first and foremost, we're back above all these key moving averages, the 20, the 50, the 200. So if we start pulling back in here, just keep an eye out. Maybe we get a 50% retracement to around 39. That means price would be flagging here, and then we can maybe look for another breakout, try to get back above 40, 50. But we'll see here if the ride wants to continue to run. If it's all, a lot of this depends on what the 10-year yield is going to be doing. So if the 10-year yield starts to back off, I would imagine to see these two sectors take a little bit of a breather too as well. If you take a look at oil continues to just kind of rise up. Today it finished with an inside trading day candle. I'm just keeping an eye on this rising wedge here. You can see that when we got to this previous high, this area of resistance, we did doodle around right here, and then we started breaking out higher. So I'm keeping still an eye on this one. RSI is pointing back down in that overbought territory. So if it starts coming back down, we might see some continued weakness, break down through 90, maybe reconnect down to this green zone right here, which is around 84 to 86. So, I think it's more than possible to come back down there. I think it's more than possible to even get a stronger snapback here before we rise. It's a very strong performing sector, but keep in mind, nothing just goes up in a straight line. And at some point, it's going to shake out weak hands where you're going to see a pretty severe move. And at that point is when you need to start looking to get in if, oil and energy stocks are going to continue to perform. Gold on the day did quite well, right? So it was up $14 or 14 points. Is up 0.77% here, but we're still within this pattern. What I'm starting to notice at this particular point in time is I'm starting to see actually a lot of gold miners show up on some of the scanners that I use. So we might be starting to see a trend here momentarily. This could be potentially a fake out. I don't know yet. It's like day one of these indicators that I'm starting to see trending with various gold miners. So if that's the case, I'm going to be keeping an eye on it. I'll probably be talking about gold miners more frequently. Silver also had a very good day. Dollar didn't do much at all. It's still consolidating after this recent pullback. And you can see the dollar is consolidating right here, right? And what is the S&P 500 doing? Well, the S&P 500 is really just moving sideways too, also with an inside trading day. Let's look at the risk ranges and some 15-minute time frames. Then we're going to hop into crypto. Then we're going to call it a night. So let's take a look here. Inside trading day in the S&P 500. So, not a big exciting type day. Red candle, right? I'd say that if we start getting below the low of today or below the low here, we're going to go test that 200-day moving average again. And that opens the door to lower. But just keep in mind the risk range, 437.50, 460 on the high end right here. We're still well within it, which leaves the opportunity for much more volatility to show up. Remember, volatility is plus or minus. So as it stands right now, we don't really have a clear setup. If you want to look at this from a bearish perspective, you are looking at this as a potential bear flag. If you are looking at this as a bullish perspective, you are looking at this as a potential bull flag, right? So keep an eye on both of those. Don't just think, okay, it's bearish, it's heading down, or it's bullish, it's going up. If we start cracking down some certain levels, we will know. Now, if we start breaking out of this 450, we start, get a confirmed close above it, or 450, 250, that sets us up to potentially come up here and retest that 50-day moving average and maybe potentially bump our head up into that upper range. Now, if we start cracking down through this, that opens the door obviously down to around that 437.50, which is the lower portion of that risk range. If we take a look at the 15-minute time frame, well, we didn't do much, right? We kind of sold, we bounced around, chopped around, we sold off, and then we started to rally back. Where did we rally? We rallied right up to that 5-day moving average, acted as resistance, and then we started cracking down, created a little bit of a hammer candle towards the end of the day. I don't know what the futures market is doing right now. Honestly, it looks weak, so we'll see if we get some continued weakness. But as it stands right now, there's a couple levels that I'm keeping an eye on, right? 437.50, that's the risk range, lower risk range. Even if we start heading lower, I'm looking at these levels right down here, which is that volume shelf point of control. My bad. So this little shelf of volume right here might act as somewhat of a magnet. If price pulls back, I'll be probably looking to play some sort of bounce there. But from the upper end, we still have this gap right here. And, it's very interesting to see the S&P 500 not trying to come fill this gap from the upside. I remember that in 2020 during the pandemic, when the market started to roll over, one big tell that we're going to have further downside is we saw some strong moves to the downside, and the market didn't even try to recover and fill this gap right here. So, and it goes both ways. With the market doesn't try to fill a gap beneath it, that's showing some strength. A breakaway gap can really cause that, and a breakaway gap can go obviously to the downside, and a breakaway gap can obviously go to the upside. So keep an eye up here. This is overhead resistance, but we got to see if the market even wants to try to fill that. If we take a look at the Qs, okay, the Qs also inside trading day, not much to report here. Looked a little bit weaker, especially when you look at the holdings of the Qs, right? Like Amazon put in a big shooting star type candle, which is basically, you have, a very strong bullish day, makes it look all, bright and green for the day, but then the bears step in, sell it all the way out. And then it looks like this just long upper wick. So Amazon looks like that on the day. Other performers, Microsoft, Google, those are all big weights there in the Qs. Tesla, etc., are all going to be ones to keep an eye on. But the Qs overall, they held up. It's just an inside trading day. So if we start getting below this level here, or start cracking down just right around that 350 marker, that opens the door for potentially hitting the lower risk range right here. Now, if this is flagging, if you want to call that a bull flagging, you'd want to see it get back above 360, have a daily close above there, and that opens the door to obviously head higher. So as it stands right now, it's a very difficult, very volatile environment, but right now price is consolidating. It's holding up as we speak. Okay, 15-minute time frame, we still have that gap above us, very similar to the SPY. So I'm not going to dig into this too much. You understand the levels, take a screenshot, keep an eye on it. But as you can see, we talked about the possibility of this being a bear flag, right? And we talked about this, bear flag within a bear flag. Well, guess what? We started selling off. We found some sort of bounce, right, up into around the 5-day moving average. And then we sold off a little bit, cracking beneath that trend line that I recently drew out. So that could open the door for obviously some further downside. We'll see here if we can recoup. We need to recoup fast. The more we stay down here, the more the 5-day moving average is going to flatten to turn over. And then that puts us in an area of a downtrend where we have lower highs and lower lows. So you don't want that if you are obviously a bull. If you're a bear, well, it's completely different. If we take a look at the IWM was up 0.5% today. You can see here we have a low to a higher, a low to a higher low, and this one actually performed not too bad. It could be potentially flagging here, consolidating, but just keep note, even if it bounces up, we're coming into a declining 20-period moving average that's very steep to the downside. Declining 50, 200's flat to declining 2 as well. This will be declining if price obviously doesn't recover and recover quickly. We could very well be in a bear flag too as well. If we start moving above the high of today, that opens the door to come retest this previous high and obviously that 205. But if we start cracking down, obviously this low right here, that opens the door for some further downside in the IWM. If we take a look at the 15-minute time frame, these are the key levels that I'm watching for going into tomorrow. I want to see 203, right? So that would act as resistance here, resistance there. The upper risk range is just above that. So even if we get a crack above it, keep an eye on for that level to potentially have some resistance to pull back. Maybe that resistance becomes support, and then we start doodling around in there, and then we could potentially move higher in the IWM. However, as it stands right now, the 5-day moving average, it's trending up, but it's, probably going to start flattening out here if price doesn't advance. And as you can see here, we might be flagging somewhat where we had this little negative divergence. And if this starts cracking down, that opens that door to 195, which is, this prior area of resistance. And you can see here where price kind of got caught up was right around this volume shelf profile. So if this gives way, it does open the door for a little bit lower. So those are the key levels that I'm keeping an eye on. Let's hop into crypto. We did get a buy signal on the Sailor to Shift tool. Bam. Okay, so the week closed up there, and basically what that means, the next week opens, right? Started moving down a little bit, and I said, post on Twitter. If you don't follow me there, you can follow me. It's just Mike P. Silva. The link will be in the description to there and my Instagram. We got above this trading week. Once we got above, I put in my buy order, right? And then we started moving a little bit higher. So as it stands right now, cool, I'm in the green. Is this going to be a whipsaw? It might be. I don't know, but all I know is that I'm trying to catch the larger moves and save myself from the big downfalls. All right, a lot of people, keep saying like, well, I don't think it's a good time to buy. Yeah, I don't either, but I don't really care. The goal of this is to outperform the price of Bitcoin. If you stuck with this strategy all last year, you would have had around 180% return, if I remember correctly, whereas the price of Bitcoin, I believe, was down or flat or slightly up. I can't really remember. So here, obviously, I haven't really been in Bitcoin with this strategy in 2022, and 2022 is obviously down, and right now on this strategy, I'm currently up. So if I get a sell signal, then I'm going to have to look at this week or the prior week, whenever that sell signal triggers, and then I have to put a stop in below the previous low. So even if I get out of the position, it's going to be a relatively small loss, and I'll still be outperforming the price of Bitcoin. That's how I'm using this tool. Okay, you can use it as a tool however you'd like, or not use it at all. It doesn't matter. It really depends on what your goals are. I'm just kind of sharing with you what I'm doing with this specific crypto portfolio that I'm playing with here. All right, if we take a look at the price of Bitcoin on the daily time frame, obviously we had that big move, kind of broke that bear flag pattern, and we've been just kind of going vertical. So is this vertical thing going to continue? I'm sure it's going to consolidate or pull back at some point. I do like how we're back above the 50-day moving average. I do like here how we got that little signal, the Bitcoin outperforming the SPY, getting back above that 50 EMA. That's a positive sign. Ethereum did not give us that sign yet. And you can see Ethereum has been making a pretty vertical move up too. So as it stands right now, we are running and bumping our head into a declining 50-day moving average. So maybe we do recover it and this starts to trigger up, and maybe we do continue to just make some sort of V-shape recovery. I don't think that that's going to happen. I think we're going to find some overhead resistance, and then we're going to have to take it day by day. If it wants to keep on running up and get past that 50-day, I would start looking at 3,400 as a potential next head of resistance there. All right, that's all I got for you on today's episode, everybody. I wanted to try to keep it as short as I could. I don't really have anything to really recap there other than just keep an eye on those 15-minute charts, those inside trading days, right? We're bouncing around right now, and the market is still pricing in, obviously, a lot of volatility. Stay safe. Have a wonderful night, and I'll see you back here tomorrow.